this morning, starting with an update on the Elon Musk Twitter saga. Elon Musk is increasing his personal financial commitment towards his acquisition of Twitter to $33.5 billion. The news comes on the same day as Twitter's annual investor meeting, which saw executives shut down any questions regarding the deal. Musk updated offer, which would provide an additional 6.5 billion in equity financing, is according to a new SEC filing. Now, this sends shares of Twitter up over 5% after the bell and comes after a positive day of trading for the social media giant. Now, Musk recently put the deal on hold as he investigates the amount of fake and spam accounts on the platform, which, if that is true, would create a discrepancy in the platform's number of users. And right now, they're alleging that it could be up to about 5% of fake accounts, which technically isn't that many. It's really hard to, really manage how many people are making these bot accounts or fake accounts to try to drive numbers up. But, it's interesting to see that he is trying to put a stronger foot forward at this deal, because a lot of people were like wondering, is he going to go through with this? If it's going to happen? And I guess this is his push.
There's still a lot of that on the table, even with this move, if I'm being honest. I mean, I think at one point, Elon Musk threw out there, or someone threw out there, they're like, who knows? It could be 90% of the accounts are fake on there, just given, some of the way that the numbers were run in terms of identifying, those fake spam accounts. But the reality is this has been a choppy deal from the start. It's been one that seemed like it was on thin ice from the beginning. And even with this move, while the market is taking this move as a positive indicator that Elon Musk is truly here to close this deal, and that's why you're seeing it up almost 6% in the pre-market right now. The reality is that some of this restructuring to others in the market really seems like it makes it even more probable that this doesn't go through, or increase the odds that something happens here, because a lot of the funding is reliant on Elon Musk coming up with that cash, so to speak. And we know that in terms of his overall, value and what he is worth, he certainly has that money, but liquidating some of his assets to get that and put it in place is a whole nother thing. I think there still is this lingering idea that he's going to try and renegotiate this deal for better terms. And if that ends up happening here, again, that's another layer that this deal may not go through. So this is one of those things where it seems like on one side, there's better probability. On the other side, there's reduced probability of this deal.
Right. I mean, you bring up a good point. He wants to negotiate a better deal. It's like when you buy a house, you go in and you're like, oh, this is wrong. This is wrong.
I'll do
and the
all
appraisal,
cash, but I want a discount.
Yeah, exactly. It's one of those things that he's trying to pull here. And like you said, he's worth the money. I mean, he was recently worth $288 billion. Now that's down to $192 billion. But I mean,
the struggles.
Right. What's 33 billion? I mean, at that point, it's still chump change for him. So, hey.
And it can go up tomorrow if the stock of Tesla goes up higher. I mean, it really just depends on that. It's one of those things we'll continue to watch this deal. This is the latest kind of movement here after what has been an up and down roller coaster to try to get this deal to close. We'll see if it does.
Yeah.
In the meantime, let's turn to this. Investors reacting this morning to the news that Apple will keep its iPhone production flat this year. The tech giant is calling for 220 million phones to be assembled. Sources familiar with the internal numbers tell Bloomberg that that's roughly the same as the number made in 2021. Analysts had expected Apple to make 20 million more units than that. Apple no longer released its iPhone sales numbers, but smartphone sales as a whole have slowed down this year. Also, COVID lockdowns in China, that has been hindering smartphone production. Meanwhile, Apple now says that it will raise wages for corporate and retail workers. This comes as companies try to remain competitive in this historically tight jobs market in the U.S. Apple Store workers will now be paid a starting wage of $22 per hour, up from $20 an hour. The pay increase will go into effect by the end of this year, and this follows calls from workers at some Apple retail locations to unionize. Also, Google, Amazon, Microsoft all have updated their payment structures in recent weeks as well. A lot of layers to the story, from the unionization efforts weighing on the reality that Apple is going to have to increase its wages here, to then those numbers in terms of sales of iPhones. Listen, we are already seeing this in the broader kind of macro picture. People are shifting away from buying things, which is what they've been doing for the last 2 years because they couldn't go out and do anything, to now, in a recession, not a recession, in an inflationary environment, being pressured for everything going up higher, saying, hey, I'm going to be more picky with my money. Certainly the American consumer still seems strong, but they're using that on services. They're using it on travel, and not so much to buy something like an iPhone right now. So Apple kind of dealing with that reality. Among the reality, and listen, a lot of it production especially key components of its production, are in China, and that has dealt with lockdowns that have hindered the ability to produce more. So you're dealing with production issues, even a demand possible pullback. So these numbers make sense, and it's why you see Apple, like other companies right now, kind of pulling back over the last couple of weeks, and now even today, 1.3% lower in the pre-market.
Yeah, I'm happy they're doing this. I think it's a smart idea. You don't want to overextend yourself, especially if you can't get the supply for it. And I think it's more important that they focus on their employees. Right now, they just apparently released a statement saying that they were going to increase the pay for retail workers to $22 an hour, which is up $2 from $20 an hour.
Yeah.
But there are still, those unions you mentioned, 6 different locations are trying to start unions. Actually, in Atlanta, Georgia, on June 2nd, they're going to be having their first election in their union there. And once that happens, it's just going to have that, snowball effect to make sure that other people get the rights that they want. For example, here in New York City at the Grand Central Terminal, they were like, 22 is nice, but we want 30. It's a lot more expensive to live in New York. 30 an hour, I think we might need to get a job there.
I'm saying that's not that bad. Well, if they can get it, they can get it. More power to them.
Right.
I think the reality is, and I'm not bearish on Apple by a long shot here, but the reality is Apple has pressures from multiple revenue streams. When you even look at the App Store and the issue that it's dealing with the App Store and a lot of pressure to reduce the fees there or lose them altogether, then you have this where sales are going to be coming in flat for something like the iPhone, which is a dominant part of Apple's revenue, while that bottom line number is getting higher because you're having to pay workers more. That means your margins essentially here are tighter. And investors don't like seeing tighter margins. So I think it's going to be a bumpy road as Apple starts to figure out kind of rebalancing, getting more revenue and increasing revenue streams, while the pressure on that bottom line, especially when it comes to workers and wages, even supply chain issues and all the pressures that come around that, transportation costs, you name it, costs are going up even for a lot of these companies.